this block three covers, since each of these projects have certain deliverables and certain costs involved, staffing involved, and the timelines involved. And therefore, before the completion of the timeline, the project has to be handled successfully in such a way that the desired goals are achieved. So therefore, there is a need of continuous monitoring of the project and continuous, periodical meetings to be held in order to see the progress of the project. Otherwise, it can go Agri. And you must have seen quite a number of projects, at the government level. They are announced and they don't start on time, and because of lack of one or the other components missing in it, they will take their own time. Hence, project implementation is the most important part of the project. The project would be implemented well when we build a control system in the project. While project formulation itself, the evaluation of the project is another very crucial step that reveals whether the project has achieved the desired goal. The various tools and techniques of project evaluation. Perhaps some of you must have heard about PERT, Gantt chart, critical path methods, and things like that. So these things need to be understood very well when we talk of project management. So why these control measures are required in project management? You know, we know what is known as work breakdown system. Work breakdown system is basically the whole project will have different tasks to be performed at different times and with a cost, and someone else is held responsible for that particular task. So therefore, control is an act of reducing the difference between a plan and achievement, because the performance of a project depends upon properly doing things as per the schedule and budget. And that's as the project work proceeds, it is necessary to constantly manage performance with regard to the schedule and budget. The performance will not always be satisfactory because one or the other thing will come in the way, like corona came up in between. There may be in agriculture related projects heavy rain, tsunami, and suddenly cost escalation of certain things. So work will slip and cost may increase. But by constant monitoring and applying corrections, it is usually possible to stay very close to both the schedule and the budget. This is often called project control, or it's also in other words called variance control. So hence control is an act of reducing the difference between the plan and achievement. So project management consists of a preparation of a detailed plan with duly defined tasks involved, recording progress, comparing progress with the plan, and taking corrective action in the event of variation between the plan and the actual. Often these are done on, as I told earlier, on um, monthly conducting monthly meetings. And well, there is a also need of creation of management information system, so that the performance of different tasks is properly measured and recorded, along with the task and cost involved in it. So, while project monitoring entails the collection and recording of data, that is what MIS does. So, while project monitoring entails the collection and recording of data related to various tasks and reporting of information concerning all aspects of the project performance to all concerned, project control uses information provided by the monitoring to bring actual performance close to the planned performance through a series of corrective actions. Hence, in any project management, there is a monitoring team, there is a monitoring specialist also. In fact, there is Entrepreneurial Institute of India, the Entrepreneurship Development Institute of India, EDI, which is in Gujarat. They offer an MBA program in monitoring. So, mere project monitoring will not ensure proper project implementation. So, whatever monitoring is being done, the project management has to uh, incorporate the findings of the monitoring team for midterm for time to time corrections. Maybe, what are the kinds of challenges we normally face? Maybe somebody who is a key person in the project may leave the job. So, in which case, deploying another person in that position may take some time. So, it will, these kinds of things, uncertainties will affect. It is a project control that ensures that the planned or desired performance of the project converges with actual performance. In case any divergence is noticed between the plan and actual position during project implementation, it is the project control team that tries to bridge the gap through timely corrective action. While monitoring is a process of measuring and reporting, I repeat this, monitoring is a process of measuring and reporting, while controlling is a process that includes monitoring and acting on the reports. This is very crucial. The main purpose of control is to ensure minimal, if any, and divergence between actual project and the project plan. Hence, control is a key activity during implementation and is used in all phases of project life cycle. Work breakdown structure, as I said earlier, is a project management tool for defining the project deliverables and the task to be accomplished. The purpose of this step is to establish the project output that will meet the project goals, to facilitate the latest assignment of project responsibilities, and to facilitate progress measurements and updating project planning. The basic idea of the work breakdown structure is to divide the total work of the project into major groups and then subdivide these groups into tasks, and then, if necessary, divide these tasks into subtasks to a level where a specific organization, sub team, or individual can be identified to be responsible for completing the particular activity. The lowest level of subdivided work should be small enough to permit adequate control and visibly without creating any unwieldy administrative burden. So, criteria for developing a work breakdown structure. The work breakdown structure and work description should be easy to understand. There should not be any confusions in the description that is provided. Normally, we find there is some, there will not be some clarity. It is in this case uh, for the for the project team, time to time capacity building activities or training programs need to be organized. In fact, these training programs should not be just for the project team. It should be for the different stakeholders who are involved in the project, especially it is true in agriculture. And hence, when We talk about the training programs, for example, the watershed project, which I'm handling. So certain percentage of the project cost is earmarked for training and capacity building. Basically, this will bring all the stakeholders on one page. Hence, the capacity building is another thing which needs to be done. No attempt should be made to subdivide work arbitrarily to the lowest possible level. There shouldn't be any shortcuts. Go only for enough to identify assignable tasks. The work breakdown should result in a list of discrete, measurable, and tangible deliverables, which can form the basis for scheduling milestones that everyone will recognize when they are achieved. Hence, metrics is very, very important. Tasks should have clearly defined start and dates. Maybe there will be little variation, yet as much as possible, tasks should have clearly defined start and end dates. It should be possible to construct a schedule for a work breakdown structured task. No effort should be made to extend the work breakdown structure to the same number of levels for all parts of project. Hence, this work breakdown structure acts as a project management control tool. So, what are the control processes? Control is a multidimensional, it covering scope, changes, cost, schedule of activities, team personnel, risk, quality, and performance. The dimension of a control. In this, there are couple of things, and we'll look at scope control. This is a process in which project activities are closely monitored and controlled, keeping in view the scope of the project. During the process, control aims at ensuring that changes are brought in after thorough examination and full awareness of their impact, and that scope modification is approved and endorsed by all the stakeholders. It may be noted that in most of the projects, there will be key performance indicators. Now, for example, if you are working on a project which will have a societal impact, maybe I think we are looking at employment, then well, we will have some base level employment which is, say, um, measured, and then maybe we would like to have implement a status in the employment thing, and then maybe in addition to that, the income level. And if you are creating an institution to implement this project, then the sustainability of such institutional mechanism. So these performance indicators are, basically give a direction to us whether the project is moving in the right direction or not. It is recognized that not all changes which will occur on the project would necessitate senior management intervention. So basically, the roles and responsibilities are clearly mentioned, and there is a little bit of flexibility at each level. And if there is any major change that needs to be brought, only then the senior management interventions is made necessary. However, if there is any minor change that is made in the project, such a thing can be brought to the attention of the senior management team. This may be relating to increasing the or decreasing the scope of work, omitting work, changing the character or quality of the works, amending the line, level, position, or dimensions, executing additional work of any kind necessary for the completion of the work, or amending the sequence of any works, etc. Especially when you take up a project and when you yourself start implementing this, or if you are a part of a team where a project is being implemented through your team, you come across a number of situations where you you have to more deviate from your original assumptions. So therefore, this is anyway part of the project management cycle. The initiator of the change identifies, however, the need and determines the scope of a proposed change and will consult all relevant parties directly and indirectly affected by the change. He prepares change request justification. If there is any deviation, it has to be properly justified why the deviation is required. Normally, what happens when you develop a project, you will not have worked, you will have missed certain thing, and later, while implementing, you find that you are not included a thing. So then it needs certain uh, addition into the project. So that correction has to be done in order to see that the objectives of the projects are achieved completely. To ensure that the variation instruction justification is provided to the change controller in readiness for its inclusion in the next available meeting for due consideration by decision makers. So it's not that you bring a change and keep it with yourself. You need to bring it to the knowledge of the higher ups. That the change controller will ensure that the project change control register is maintained in an up-to-date manner such that an overview of all changes can be visible. The project change control system is the only process for changing the approved baseline project scope, program, specification, or effective contract budget price. Hence, I suggest, you know, uh, each one of you who are enrolled for this project to be part of maybe as a part of your study you can take up a document, a project sanction document, especially related to agriculture, if it is available, or maybe visit the nearest National Bank for Agriculture and Rural Development, and maybe discuss with the district manager. And maybe I think you can ask such a district development manager to share a document, because these are the confidential documents. They may not be sharing, but with the help of the document, maybe it's easy for you to understand how the contracts are prepared, how the project scope is defined, work breakdown structure is clearly mentioned, and contract signed, and what are the prices approved. All these things can be seen in a approved project sanction later. So this will help you get a clear understanding. Then change control. Changes in construction projects often cause cost and time overruns. They cause not only in cost building construction project, but even in other projects also. For example, since if you are a part of a project management team, and then if you say that the project which was to be completed in 24 months gets delayed by 6 months and it goes up to 30 months, then your manpower cost straight away gets added by 6 months, and then you will also lose time. So the benefits that are otherwise accruable through this project also get delayed. So there will be overall cost escalation. The aim of project change management is not to seek the elimination of all project changes, but to minimize the negative impact of necessary changes and avoid unnecessary ones. At present, in practice, there is a lack of industry standard for project change management procedure and methods, because this involves a little bit of complicated mathematics in it. This often results, but anyway, I think sooner or later, project management experts will come up with some softwares to address this issue. This often results in changes being poorly managed on an ad hoc basis by project teams during the individual projects. In any project, scope change is very important. In any project, scope or change, the control is very important as this will impinge time, cost, quality, and delivery parameters. Change control is a crucial component of project control. Yet another control is cost. Cost control. This is a process in which project costs are closely monitored, keeping the project budget in view. Mid-course corrections are provided when necessary. During the process, the things controlled are the situations originating change, control from too low initial estimates, poor and untimely reporting, inadequate budgeting, change in input prices, and so on. Especially if you take construction, suddenly there will be increase in the price of cement, price of transport will increase, the price of labor will increase, and some changes in the price will have multiplier impact. Maybe must have seen how, with the war between Russia and Ukraine, has affected the the economy already. Hence, every project needs a budget against which to measure costs that are incurred. The overall project budget requires approval by management and from the owners of the business plan. Breaking this overall budget into work background structure related parts permits the project manager and each task leader to control his or her own performance. Costs and resources should be identified for all tasks on project schedule, including management. The objective is to be as realistic as possible and provide an allowance for uncertainty and accuracy. You cannot accurately estimate the cost of a project until you know how long precisely it will take and various cost elements. What are the cost elements? Labor, inflation, etc. And imponderables impinge on the cost. The work breakdown structure and project schedule are the key supporting documents for developing a project budget. Cost control is a function that is required to maintain effective financial control of a project through the processes of evaluating, estimating, budgeting, monitoring, analyzing, forecasting, and reporting the cost information. This is very, very important. Otherwise, the project finance get affected. It is the ability to maintain and calculate appropriate cost data relating to a product or a service. Project estimates start out in a broad framework, and as a project deliverables come into the focus, we're able to more accurately define our estimate. A good estimate clearly defines what the project will accomplish, the assumptions made, how long the estimate is valid, and how much the project will cost based on current information. A good estimate presents to the stakeholder everything relevant to the proposed work without holding back any information. If there is a disagreement in price, assumptions, or range variance, it is better to discuss this issue in time. Schedule control is another dimension of control. Next to cost, time is the most important parameter that needs to be controlled in this process. Control mechanisms are put in place to monitor and control the schedules of a project. During the process, the things controlled are the situations arising from incorrect initial time estimates, incorrect task sequencing, incomplete preceding tasks, and so on. These, especially that is where the expertise of a project manager counts. He should have a proper intuition, a good intuition, because assumptions sometimes can go wrong. Anything can go wrong, and our assumptions can also go wrong. The initial owner approved schedule represents a fully integrated project with an additional definition for the current project phase. It is the planned or baseline schedule for further reference until changes are authorized. The objectives of scheduling multiple tasks include providing for owner input via milestones, approvals, or other activities, identifying calendar completion dates and constraints, determining cash or cash flow requirements, determining resource requirements, refining estimating criteria, obtaining improved project control capability via what if analysis capability, providing effective communication for buy in by all participants, and providing a basis for easy revision and comparison to the best client schedule. All participants must contribute to or own the schedule and all revisions as the project progresses. Otherwise, coordination will break down. In order to ensure that a project schedule is a useful tool to identify, analyze, and prioritize the related impacts, certain factors must be incorporated. And one of them is the critical path method. Critical path method is a schedule should clearly demonstrate how the work is to be completed. The work sequence and time duration should be the actually intended ones, not simply approximations to satisfy the contract requirement and use up all the available time in the schedule. Total float should be available with flexibility built into sequence to recover lost time. Total float is the schedule equivalent of budget contingency and is equally important. The schedule should be sufficiently detailed to clearly show the use of major equipment, sequence of activities by task and location, etc., as well as regular, regulatory milestones. Because any project management depends upon clarity of the task. If there is no clarity, it can affect the project performance. Schedule activities should be cost and resource loaded to adequately evaluate options for sequencing and durations planned. The actual progress of the job should be tracked and recorded in accordance with the original schedule or authorized changes. In order to identify variance in a time frame, the schedule should be updated periodically throughout the life of the project. Usually, this is once a month occurrence with a distribution of the results to all involved parties. After each update, all parties should ask themselves three questions. Where are we now? Why are we here? What should we do about it? As the project nears completion, the focus of scheduling changes from completion of construction by area to completion by systems or phased operational needs. Pre-commissioning and construction completion must be treated as concurrent activities. As such, critical path method, while essential for completion tracking from start to finish, must be supplemented with pre-commissioning or operational transfer schedule. Without this, the time impact cannot adequately be identified or analyzed. PERT and CPM, PERT, that is project evaluation and review technique, and CPM, that is critical path method, are two planning tools for defining the parts of a project and putting them together in a network form so that the person responsible for each element of work knows what is supposed to happen and when in relation to other project activities. The basic difference between PERT and CPM method is the reliability of the estimate of the duration of each activity. PERT is used when durations are based on probabilistic data, whereas CPM is, on the other hand, is utilized when durations are known or can be reasonably estimated. In most applications, critical path method is utilized, although PERT is often used in government-sponsored projects. The critical path method example shows the dependencies of one task on another in a Gantt chart. Another type of presentation is a network diagram because the latter becomes increasingly difficult to understand as the number of tasks increases. Gantt charts are most commonly utilized. Team control is one more dimension of the control. In this process, proper control is exercised on the project team to ensure that the team remains focused on the task at hand. Team's morale, motivation, and enthusiasm remain at high levels. At any given point of time, a project manager should see that there are no conflicts with the team. Risk response control is at another dimension. This is a process in which a project is closely monitored for known and unknown risk, and proper control mechanisms are put in place to mitigate the effect. During the process, risk management plans are executed in order to respond to risk events throughout the project. As risks are dynamic, risk management strategies are continuously monitored. The approaches to be adopted are risk reduction or elimination, or risk transfer, risk avoidance, and risk absorption. By holding cyclic risk review meetings, each item can be discussed and action plans and mitigation processes identified, initiated, and implemented. As the project moves through its life cycle, risks will evolve, become more apparent, and have increasing or decreasing degrees of impact and likelihood. Risk response control is a process by which risks are kept in the forefront of management discussions and thus reviewed on a cyclic basis. Items that the risk register will hold in order to monitor and drive this process will include outstanding action, action owner, action issue date, action status, action response, and action closeout date. The Normally, if you see any software project, they will have these things monitored very well. The risk control group will monitor the progress of the implementation of the agreed risk control measures. This will ensure that all risk control measures are incorporated effectively and that any variation in the measure or any change to the risk profile are identified and appropriate action is taken. Quality control is one more dimension of control measures. Managing quality on your own project means that you must first understand the specific quality expectations of your customer and then put a proactive plan in place to meet those expectations. The proactive plan contains a number of elements, the most important of which are the quality control and quality assurance activities that need to be performed. Quality control and quality assurance are important concepts, yet most project managers have only a vague understanding of the meaning and the differences between these terms. Quality control refers to quality related activities associated with the creation of project deliverables. Quality control is used to verify that deliverables are of acceptable quality and that they are complete and correct. Example of quality control activities include deliverable, peer reviews, and testing process. Performance control is one more dimension. This is a process of monitoring and controlling various project processes, each of which contribute to successful project completion in one way or the other. In this process, there may be unexpected technical problems, a client requesting changes in specification, interfunctional complications, and so on. So, this will lead us finally to look at the earned value, schedule performance index, cost performance index, schedule variance, cost variance. So during the implementation of the project progress, percentages are assessed at regular intervals for each activity along with resource utilization taken from allocation sheets and cost data taken from cost reports. Comparing the actual information collected in this manner against the baseline plan will allow the indices to be calculated. Now, what is earned value? It is a percentage complete into budget for each activity. Schedule performance index, which is otherwise known as the SPI, is earned value divided by planned value. Cost performance index is earned value divided by actual cost. Schedule variance is earned value minus planned value. Cost variance is earned value minus actual cost. Earned value highlights the trends and allows outturns to be predicted and has been shown to be very accurate project management tool. Unfortunately, in most of the projects which we are implementing will not have calculations of these things. And then control parameters. Three control parameters: time, which is very important, cost, and quality or performance generally provides a trade-off. Since resources are limited, it's more likely that we prioritize the control parameters in a given project. In some projects, time is of paramount importance, while in some, for example, in the military, it is time is very important. While in some other projects, quality may be critical. More often than not, achieving the time target may mean sacrificing the quality a bit. Consider a project of holding an annual horticulture show or a mega sports event like national games. In these types of projects, once the date of the event is finalized and fixed, the time parameter is of utmost importance. The event has to take place on the scheduled predetermined date. Here, in case of any delay, either we need to deploy more resources or we'll have to compromise a little on project quality. In other words, time is assigned in the highest priority and cost or performance may be negotiable parameters. In the case of transportation project like setting up of Delhi Metro corridor or setting up of manufacturing plants safety system and therefore performance becomes a prime parameter. While a slight delay in project implementation may be acceptable, performance cannot be compromised. In a seasonal industry like setting up a sugar crushing unit, time is important. In case the implementation of a sugar project is not completed by the time the sugar crop matures, the investment will become idle investment till the next sugar year and is likely to adversely affect overall project viability. Why need for control? Control is essential to have um, an eye on unexpected technical problems, delay in raising the required financial resources, change in project scope, inadequate initial budget, new technological breakthrough after commencement of the project, underestimation of cost at the planning stage. This often happens. Delay in supply, non-availability of required material, personnel, and equipment. Interpersonal functional lack of coordination between different teams executing different tasks. Delay in task execution. Suddenly, some holidays may come in the way and affect the performance of the project. Incorrect task sequencing. Key project team members deserted the team halfway through the project completion. Environmental changes such as the change in government policy, change in the operational environment, extraordinary increase in input prices, natural calamity, all this can happen. A whole lot of unforeseen circumstances. All this can have a dangerous effect on the project implementation. Hence, in project management, there are mainly three control methods: pre action, concurrent, and post action controls. Let's understand what's a pre action. In this type of control, a project manager wisely anticipates problems and enforces required controls so that deviations are prevented. Concurrent controls. This method of control is exercised after the project activities have commenced. Most of these are steering controls. For example, conflicts arise between team members and are instantly solved in a special meeting. An activity in a sequential process is delayed and a correction is applied before its effect is escalated, and so on. Post action controls. These controls take into consideration the end results of a project. In a sense, these are futuristic. At the end of a project, a record is made of what went right and what went wrong in the course of the project, and this provides controls for future projects. Hence, a project management manager ensuring proper documentation of the closing of a project is another such control. So, it needs a special ingenuity in devising a control system. So, the prerequisites of setting up a control system are defining or prioritizing the control parameters of the project. What to control? Is it to control time or control cost or performance? Defining the acceptable level of variation, that is tolerance limits. Measurement of control parameters. Recording progress. Providing feedback to the project team. Instituting corrective action where required. The first requirement of setting up a control system is to assign priority to control parameters: time, cost, and performance. We need to define which parameter is most important or critical and needs to be controlled maximum. Having prioritized the control parameters, we need to define limits to variation of the performance. We need to define whether cost exceeding the project estimate by 2% is acceptable or only 1% variance can be tolerated. Some clients do not tolerate a delay of even 1 day, while sometimes a delay of even 1 month will be acceptable, provided a specific standard of performance is achieved. The next question is how to measure control parameters and when to measure variation. A commonly used method of measuring variance is finding a ratio. This can be presented in percentage term. A project involves persons, materials, time, and money, and therefore, control systems are necessary for the proper harnessing of them for the purpose of successful project execution. A control system is a group of processing and sub-processes. There are mainly three types of control methods in project management: pre-action control, concurrent control, and post-action control. The three parameters of time, cost, and performance have to be controlled for the success of a project. So, this is about the project control. Now, if we look at the project appraisal and project evaluation, which is very, very important. Every project has a start date and end date, and also costs associated with it. At the same time, every project is expected to generate a stream of benefits in the form of enhanced productivity, leading to higher profits generated over a period of time. It's worthwhile to invest resource in a project only if the project will generate additional profit above its initial cost. In case the sum of expected benefits from the project over time is less than the amount investment made in the project, it is natural to conclude that the project is not worth undertaking. I repeat this: in case the sum of expected benefits from the project over time is less than the amount of investment made in the project, it is natural to conclude that the project is not worth taking. Often we are faced with a situation where multiple projects compete for our limited resources. To decide to which project to commit the resources, it is required to calculate the total costs and benefits expected from each project in monetary terms. Thereafter, net expected benefits of all the projects are compared and the project offering the maximum benefit, its cost will be selected for implementation. Two terms, project appraisal and project evaluations, are generally used interchangeably. Project appraisal is an ex ante analysis of a project before it is undertaken. At the appraisal stage, the expected cost and benefits of a project are estimated to decide whether or not it is desirable to start the project. Once a project is undertaken, after project appraisal, the final actual cost and benefits of the project are compared with the estimates made at the appraisal stage to determine whether the project achieved the desired expected results or not. This ex post analysis of the project after its execution is project evaluation. In effect, project evaluation is close to a post mortem report that provides useful insight into project's planning and appraisal. Project evaluation helps us in identifying the errors committed at the estimate stage to help us take corrective action in the future when new projects are planned and appraised. Project evaluation determines real and actual benefits derived from the project and its effective cost. The objective of the appraisal is to determine the future expected contribution of various competing projects, to determine various costs associated with project actions, to design a conceptual framework that helps in monitoring and evaluation of action, and rational allocation of resources among competing projects. There are various techniques for economic and financial appraisal. One of them is undiscounted evaluation technique and discounted evaluation technique. The primary prerequisite of all appraisal technique is the determination of cash flow and cash inflow and cash outflow associated with the project. Even though some qualitative factors such as egalitarian and distribution of income and improvement in the standard of living of the target group play a very important role in the selection of projects, it's not possible to assign a value to these desirable attributes in quantitative terms. We therefore restrict ourselves to consider only those costs and benefits associated with project costs which can be quantified in monetary terms. The payback period accounting rate of return method. These two methods are used for undiscounted appraisal methods. Both these methods are easy to understand. Payback period, it's a conventional method of appraising generally simple projects which do not involve huge investment. In this method, time required to recover the initial investment in the project is calculated. Normally, if the payback is 3 years, then it is considered as a feasible project. The payback period is the length of time required to recover the investment. In simple words, the payback period is a period required to recover the cost of initial investment through a stream of revenue generated in the project. In case the project generates the same cash flow every year, formula used to calculate the payback is as under. Payback period is equal to total initial investment divided by amount of annual cash flow. In case revenue generated by the project varies over the years, the payback period is calculated by adding the revenue over the years till the initial investment is recovered. The shorter the payback period, the more desirable is the project. That's why normally um any project which uh, gets the within 3 years all the investment back, such project is called positive. Then there is accounting rate of return. This method is also known as the average rate of return, or it's called as ERR. ERR method takes into account the total return expected from the project over its entire life and the average investment made on the project. Since accounting profit is used as a measure of return, the method is also known as the accounting rate of return method. The method of calculating accounting rate of return is average annual earnings divided by average investment into 100, where average annual earning is equal to total of anticipated annual earnings after depreciation and tax divided by the number of years. Average investment is equal to total investment divided by 2. If there is scrap value, then average investment is equal to total investment minus scrap value divided by 2 plus scrap value. In the case of additional working capital, average investment is equal to total investment minus scrap value divided by 2 plus scrap value plus additional working capital. So based on this, the project is appraised. Discounted appraisal technique. The payback period method acts as a hurdle for projects when the time span extends over more than one financial year and the time value of money needs to be taken into account. It can go on up to 5 years. We have seen about payback method and ARR method of appraisal suffered from 1 year major drawback, namely these methods did not consider the time value of money. Hence, the undiscounted methods do not distinguish between two projects when the overall return is the same for both the projects, but the time of receiving the revenue differs. There's yet another this thing, net present value method. The stream of future benefits or the cash inflow from the project is discounted at a required rate of interest to arrive at the present value using the following formula. That is CN divided by capital I plus small I, bracket raised to n, where Cn is the future value of benefit in n years, hence I small I is discounting rate. The present cost is offset by the present value of a stream of benefit obtained from the project and is called net present value. Net present value is equal to present value of benefits minus present value of cost. Cash flows are likely to be negative during the initial years of project because of the initial investment. A project would be successful only if it generates sufficient positive cash flow during its economic life to exceed the initial investment. A project is acceptable if the sum of the net present value of all estimated cash flows over the life of the project is positive. You may have seen number of government projects do not yield the proper results. Now, with the investment of about 200 crores, a market was created, a terminal market was created in Whitefield by name Safal. And it was to eliminate middlemen. The idea was to see that marketing support is given to growers directly. So therefore, grower associations were made. But after more than say 10 years, well, it was not able to perform. The competence of the project management team was not sufficient to overcome the expertise of the local traders, and hence it ended up closing down and finally got privatized. So it's also important to understand the discount rates, internal rate of return. Whatever investment you make, you should create enough returns and, which will help the project to be successful. The calculation of internal rate of return It considers the time value of money. It also considers the cash flow stream over the entire life project. Internal rate of return is a true measure of the rate of return on capital and is more meaningful and acceptable to executives and financial analysts. Internal rate of return suggests the maximum rate that a project can earn whether the firm's cost of capital is given or not, compatible with the corporate objective of maximizing shareholders' wealth. Internal rate of return assumes that intermediate cash flows generated are reinvested at the internal rate of return of the project. The disadvantages of internal rate of return are projects differ in their expected lives. Projects differ in terms of cash flows. Projects differ in investment outlays. There can be multiple internal rate of returns for the same project. There is yet another thing called profitability index. This is another useful tool in financial appraisal is the profitability index. It is the ratio of the present value of expected future benefits discounted at a required rate of return to an initial cash flow. This is also known as the benefit cost ratio. In almost all the projects related to agriculture or agribusiness, cost benefit ratio is calculated. So normally it should be more than 1. So, banker's point of view, a project is a plan, limiting it to manufacturing units. A project is a plan to set up a manufacturing business. A manufacturing business is one that uses plant and machinery, manpower and capital to process raw materials into finished goods. The finished goods are then sold, hopefully, at a profit. The sale proceeds are subsequently utilized to purchase more raw materials for conversion to more finished goods for more profit, and so the manufacturing cycle continues. Hence, appraisal means evaluation. Project appraisal, therefore, means the evaluation of a plan to set up a manufacturing business. If we substitute the term plan evaluation for project appraisal, we achieve a much better understanding of what a banker should be doing in carrying out a project appraisal. The term project appraisal by itself appears to connote that the act of appraising a project is an end in itself. On the other hand, plan evaluation connotes that we look into each and every aspect of a plan to evaluate its chances of success. As soon as we begin to evaluate the chances of success of a plan, we begin to look beyond mere appraisal to a future long lasting and successful relationship. And this is precisely what a banker should be looking for in any new existing relationship. Hence, a banker should have a very clear understanding of the project management and project management team and a document prepared by the project management. Obviously, for a plan to come into being, there has to be a planner. This planner is popularly known as an entrepreneur. An entrepreneur, by definition, is a person who is willing to take the risk of investing cash today in a business in anticipation of an acceptable cash return in the future. Since the future can never be predicted with certainty, the entrepreneur faces a risk in making an investment. It would be wise on the part of every banker to remember that in financing any project, he becomes a major investor himself. A bank lends cash today to a customer to invest in his business in the anticipation of a cash return in the future in the form of a interest as well as the return of the principal amount. A bank, therefore, is also an entrepreneur. I think this is very interesting. As like an entrepreneur who prepares a project plan, even the banker who finances the project, he is also an entrepreneur. The difference is in the kind of assets he invests, and that he invests someone else's money, just as the borrower does when he takes a loan. Once we accept that a bank is in reality an entrepreneur in every loan decision it takes, we must also accept that project appraisal, as generally practiced, is an inadequate tool for taking appropriate credit decisions. The success or failure of a business depends on a complex set of factors that includes infrastructure, government's economic policies, the condition of the market the business is entering, and financial strength of the entrepreneur, techno managerial ability, and the degree of risk involved in the particular business market. Hence, mathematically, this can be presented profit is equal to function of infrastructure, government policy, market condition, financial strength of the entrepreneur, the techno manager ability of the entrepreneur, and the risk factor of the particular business market. So, profit is function of, once again, infrastructure, government's economic policy, market condition, financial strength of the entrepreneur, techno managerial capability of entrepreneur, risk factor of the particular business market. So this is represented in a very simple way. P is equal to F into bracket IGMFTR. So with this, we can understand number of variables to better approximate the real world and to further define our mathematical statement. This would, however, make the banker's work so cumbersome as to make it impossible for him to use it as a practical tool. The danger in too much simplification is that it may not represent anything even close to the real world picture. However, if we treat infrastructure as a subset of the government economic policy and the entrepreneurial financial strength as a mix of equity and loan, P is equal to function of government policies and market and techno managerial capability and risk of the entrepreneur. So this is how we can work on the appraisal of the project. So there is a very standard format of project appraisal report, which generally contains information such as general information, which includes name, constitution, location, nature of industry, product, promoters and their contribution, cost of project and means of finance, promoters details, market feasibility report such as segments, competition, pricing, SWOT analysis, marketing and selling arrangements, particulars of the project, product and capacity, plant and machinery, raw material, utilities, techno feasibility report, which includes technology, alternatives, new developments, competing technologies, SWOT analysis, technical arrangement, and production process, environmental aspects, schedule of implementation, financial feasibility, which includes cost details, working capital, means of finance, profitability and estimates, assumptions, projections. Under projections, again, projected income statement, projected balance sheet, projected cash flow statement, coverage ratios, break-even analysis, economic considerations, all these things will constitute your project document. So I think if you visit any of the business management institutions, you normally get to know about the project documents. or any institute which trains people in project management, in entrepreneurship, they will have project reports, readily made project reports available for your studies. You can look at that. Now, once when the project is prepared, completed, and what's important is project closure. It's, we call it withdrawal stages. So the withdrawal stages, there are certain steps which need to be followed. At times, projects are abandoned due to resource constraints or a shift in the management focus. It's also likely that the project is not abandoned but is executed with a truncated or modified scope as compared to what was originally envisaged during the project definition phase. Whatever be the situation, project completion as envisaged, project abandonment, or project executed with modified scope, it is in the overall interest of the organization to dedicate resources for proper closure of the project. The organization which do not allow proper review of the completed project are likely to repeat the same mistakes again and again, resulting in high cost to be borne by the company while executing projects in future. So, few of the steps are project documentation, closure of project accounts, preparation of final project completion report, project review, redeployment of project staff, disposal of surplus assets, etc. So, there are certain documents which need to be maintained: legal documents, administrative sanction and approvals, accounts related documents such as details of payments received, invoices, challans, etc., personal related documents such as logbooks, leave records, muster rolls, timesheets, technical documents such as project plans and schedules. All these things need to be documented. Why should we document? There is a management practitioner, Harvey Mayer. He says provides documentation provides evidence that the project has been completed in a proper manner, fulfills requirements of various quality certifications such as ISO 9000, assists in avoids of future litigation, provides starting point for review, guides the customer of the project on the maintenance of the item provided such as software, piece of machinery or building and etc. Serves as a starting point for planning and designing a similar project in future. And such data, whichever has been collected, it has to be properly stored, and it should be available. You should be able to retrieve. So the final project report is not an evaluation or a review report. It's a detailed account of project history, providing information on people who were part of the project team, who did what job, how did project team perform, which processes were used, which processes facilitated project execution, and which processes proved to be hindrance, adversely affecting project cost and execution. The final report, indeed, is a project history. It's a compendium of what went wrong or what went right. It's a recording of experience for posterity, for future learning. It contains recommendations regarding which systems and processes followed currently are required to be replaced by new processes and why. It's a record of project history as pursued by the project manager and his team. I suggest all of you to read a book written on Sridharan, who implemented the Delhi Metro project. Whatever that is learning from the Delhi Metro project, the learnings from that project are utilized now in the Bangalore Metro project, Namma Metro project, and as well as what is come up in Hyderabad. So therefore, the project documentation will help in coming up with another project where the mistakes done in the previous projects are eliminated. So in this way, The project documentation will help in understanding our commitment to the financial institutions for keeping the needs of the customer, and for our own learning and growth, for internal development. So therefore performance indicators are defined, which should identify processes to be measured, the method of the measurement, and the data source and period of the measurement. Each measure should be objective, it has to be understood, it should be controllable, should be timely, accurate, cost effective, useful, motivating, and capable of tracking. Hence, you have on one side your vision and strategy, you have customer on another side, you have aspects to be respected, the financial aspect, internal business processes, learning and growth. So this all have to work in coordination. So this is how a project closure is an important process and needs to be carried out systematically with an eye for detail. Project management is nothing but thinking everything very minutely, understanding the cost aspect of it, time aspect of it, and identifying different resources that are required for implementation and its completion with proper monitoring. Ensuring proper documentation, closure of accounts, proper disposal of surplus assets, and redeployment of human resources to another project are some of the main activities in project closure process. Project report preparation is a major part of the project documentation. The report must capture major details as to how the project milestones were met, and especially those which cause concern in terms of cost and completion time escalation. The report must serve as a knowledge base for future projects. Project review and audit help establish accountability and provide significant learning points for future projects. Performance measurements is the final activity of a project closure process. Choosing a proper framework is essential to performance measurement. Now, what I would like to say is agriculture is a huge opportunity when it comes to project management. There is a need to assess the existing uh, you know status, understand the existing status of project management practices in agriculture sector, because there are a lot of uncertainty. Based upon that, we must be prepared for continuous improvement, and this is where the uh, we have to work on the lean management system, where we value, specify what creates value, value stream, identify all the steps along the process chain, flow, make the value process flow, pull, make only what is needed, perfection, strive for excellence. This is based upon 5 S principles of Japanese. This is called SERI. SERI is nothing but classifying items into two categories, necessary and unnecessary. Seto, it is straighten, arrange items after sorting out to minimize search time and effort. Seso, that is shine, that is clean the working environment. Siketsu, systematize, that is simplify the process by standardization. Sitsuke, that is sustain, that is involvement of employees in following the established and agreed rules. These five principles are applicable in any workplace. The methodology goes beyond the simple concept and is concerned with making orderly and standardized operations. So, based on this, quite a number of things have been um brought out in this. We call it just in time, so that you do not invest money on thing when it is not required. And the value stream mapping technique, which is used in operation management, is another tool that could help in identifying all project activities. Kaizen, it's a continuous improvement. It's essentially a small step by step incremental improvement strategy. It's based on a belief that continual improvement can be brought about by series of small changes. Most of the organizations, manufacturing organizations, use Kaizen. Kaizen or 5S, not oftenly used in agriculture sector, but when you start working on agro process industries, especially this Kaizen and 5US make a huge difference, especially in packing and grading unit. 5US makes sense. Today, lots of agriculture produce, in packed and graded conditions into international accepted standards are all exported because of the huge manpower that is involved in India. There is scope for high-tech agriculture projects. Only thing is that the project management tools um, have to be properly utilized so that uncertainties are minimized and errors are minimized, deviations are reduced, and value is delivered. Therefore, all the organizational decisions need to be made to the interest of the stakeholders. The organization ensures all the projects are strategically aligned. The organization follows a standard set of project management processes and procedures. The formal performance management system is used to manage the performance of all involved in the project. The organization uses process to select and prioritize projects. The organization uses risk management processes to assess and control risk. The organization has a process for capturing, storing, and sharing lessons learned. The organization uses benchmarking technique to improve project performance. Program management processes and standards are established. Portfolio management process and standards are established. The organization continuously takes steps to develop project managers. Training plans for all levels of project employees are established and implemented. Project management processes are integrated with the all the other processes in the organization. The organization measures project effectiveness using project delivery methods. Now, coming to agribusiness, most of the things that we discussed are quite normally utilized in manufacturing industries or in any other business other than the agro business. In the agro business, it is much more important to understand the nature of the agribusiness itself and the nature of the stakeholders that are involved in agribusiness. The primarily the farmer who happens to be the farmer producer is a producer. His livelihood depends upon what he produces, and his elevation into the socio-economic status depends upon the price discovery of his produce. Unfortunately, the language of the farmer has not been properly understood by the managers. So therefore, it's now important to have more professionally trained people in agribusiness sector who understand the need of the market and as well as understand the status of the farmers. So there is a huge need of capacity building exercise at the bottom level, and based on which the upcoming projects need to be planned in different sectors. It can be uh, food processing, or it can be um, exports, or it can be value addition. In all these things, well, there is a need of quality output from the farmer's side. Once if that is understood, then I think we will have a very systematic approach that will be in place and give scope for further improvement in agriculture sector. which is currently contributing just 44, 14 to 18% the GDP, with participation of 44%. We should aim at least, if 44% people are there, 44% of the population is involved in agriculture, minimum of 44% contribution from the farming side has to be there. So it means that we have still a scope for improving our performance by, say, about 24%. So this needs a huge set of manpower, and perhaps one of the objective of IGNOU launching this course is to develop manpower in this sector. So therefore, I request all of you to be visiting some of these agriculture projects, understand the production process of the farming system and the banking system, current banking system, and the project management professionals currently available in this, and the institutions like National Bank for Agriculture and Rural Development. So this knowledge will help us in evolving ourselves as better managers in future to look after the agri business perform better.